Hello and welcome to Big Deal. I'm Nisha Poddar. Now, global private equity firm Advent International is bullish on India. In fact, Shweta Jalan, who's Advent's managing partner and India head, has said that they see high growth and investment opportunity in India and they plan to be cautiously optimistic for the next 12 months in the country. Now, I spoke to her on the sidelines of the Wharton India Economic Forum and began by asking her what 2024 is looking like in terms of investor sentiment. Listen.
So I would say on balance, we are entering the year with a fair bit of excitement. We think last 5 years have been, I would say, quite patchy in terms of just ups and downs in the economy, COVID, GST, demon. Looks like all that is behind us.
Yes.
We have sort of a good, stable policy framework, I would say very stable political environment. Yes, it's election year, but unlikely there'll be major surprises there as well. So that, and with sort of inflation being more stable, US looking better, which while we become a bit more insulated, I think, than what we were to the global sort of macroeconomic factors. But certainly if US went into deep recession, that would have impacted us. That now sort of looking like it's not going to go into at least deep recession, or at least that's a current perspective. I would say we are cautiously optimistic around the next 12 months in India. We think growth will come back. Capital markets are beyond buoyant, which is the only bad news, I would say, from a private equity standpoint, at least entry standpoint, because valuations are
but not from exit standpoint,
choppy,
which private equity has capitalized to the hilt in the last year.
Yeah,
but Shweta, you did mention about the US, macros, and what a lot of private equity and markets are really building in, and even from what discourse has been coming out of US Fed, that this particular year we are definitely going to see some turn, right, in the interest rate cycle.
Yes.
Is that being built in and creating some bit of euphoria? A lot of private equity players, especially global ones, are deploying more towards India, especially because of the growth potential and this particular economic factor.
So that's certainly looking like it's getting built into at least capital markets everywhere, right? I mean, whether it's India, whether it's US, you're seeing, I would say, unreal, I would say, somewhat slightly getting ahead of itself market.
Yes.
So there is buoyancy, which, I mean, I don't think the growth numbers yet are backing up the kind of valuations you're seeing in entirety in the market. But that's certainly being built into the valuation already, if you ask me, at some level, right?
That's right. Yeah. Indian market always bakes in the future potential also, and probably that's really kicking in. But for Advent International, what will be your strategy for this particular year? Because we have various scenarios which are out of control, which could be impacting investment decisions, and our own, election is one of the risk factors, and also several geopolitical issues and the supply chain constraints because of various global events. Putting all that together, when you enter into this year, what is the strategy for Advent?
Yeah. For us, I mean, I would say India is a very, very important geography, right? Not only within Asia, but even in the global context. We are looking at India as probably one of our main geographies from an investment standpoint.
Right.
So, I mean, I think that's an overarching statement I would make, and that's not for 2024, but I would say that's the outlook we have for, let's say, the next 5-10 years, because we see very high overall growth and investing, opportunity in India. So that's at the highest level. From an investing standpoint, I wouldn't say it's kind of based on a certain sector or, the same sectors are what we focus on, but it's really a bottom-up approach, right?
Right.
We'll continue to be actively looking at investments, and we hopefully will find the right niches, because at the highest level, like I said, valuation is high. So we will need to pick our spots very, very carefully. What we don't want is, in the current overall euphoria, we go and buy very expensive assets and live to regret it over the next 4-5 years.
Yes.
So like we always have, we'll pick our spots within our sectors and hopefully find enough investment opportunities, and maybe, with some luck, some good exit opportunities as well.
That's right, exit opportunities, but entry, you made a very valid point about the higher valuations. And of course, private equity is much more cautious than venture capital. And we have seen what happened in the startup world. But looking at this particular year's, focus in terms of healthcare. Now, that was one big theme, Shweta, for the last year, and it carries forward for this year as well. And you have been looking at several investments, you have done several investments. How is this particular space, and which pocket of healthcare still interests you and you think there is value to be driven from that investment?
So healthcare, to us, we identified that as a key sector, and probably were thankfully one of the earlier ones to have picked the sector 3 or 4 years back, right?
And you have also internally a lot of understanding and deep knowledge and expertise of this.
Absolutely.
Right? Yes.
We have a very, very strong healthcare team in India who's done, I would say, a phenomenal job in finding very early trends in healthcare, right?
Yes.
So if you ask me, we continue to believe domestic formulations is one of the key underlying themes that we like from an investing standpoint. We have an asset, as you know, in that space, in Bharat Serum and Vaccine.
Yes.
That continues to have underlying, pick a number, 10 to 12% growth, right? And then if you find the right asset, you'll find a lot more margin opportunity, and it'll make for good private equity returns. So that's one theme we think has secular growth, for the foreseeable future.
Right.
The second theme that we've played, as you know, is the whole China Plus One.
Right.
So whether it is an API, CDMO, CRO, all these spaces, India is sort of being able to capitalize on becoming a good alternate player to China.
Right.
With all you spoke about the supply chain breakdown, with everything from a US-China, trade wars and so on and so forth, right? India is very well poised to become a very credible alternative to China.
Yes.
And I think that's a theme we've played on, and that's a theme we continue to find interesting. So in that theme, obviously there's API, there's contract development and manufacturing, where we've done investments, and we continue to find those as exciting spaces.
All right.
And third, I would say healthcare services, where so far we haven't done much, and I paint that in a broader brush. It could be anything in the services side, right, on the healthcare services side. That's a space that we think is very interesting, and something that we're spending a fair bit of time trying to find the right asset there.
All right, so healthcare services is one interesting area for you. What's the strategy for Suven from here on?
So Suven, as you know, we closed the deal late last year. It's which the regulatory approvals took 7-8 months to come, and now we own the asset. As we had disclosed at the time of the investment as well, we intend to create a broad platform combining Suven and Cohance, which is one of our existing companies.
Yes.
It will be an end-to-end integrated platform which will have from intermediates to API, focusing on both generic but more innovator end markets.
Yes.
And effectively be one of the largest CDMO players in India, right?
Right.
Great growth characteristics, very strong, I would say, both underlying margins, underlying return on equity profile, right? So we think, again, that industry underlying fundamental very, very strong. It's not a story for 2 years or 3 years. In my view, that's a story for the next 2 decades, which, like I said, is really being a very, very strong alternative for China and the overall industry context.
Right. So it's a great platform that you're creating over there, and a lot of work being done in healthcare. But Shweta, you've always been also interested in the consumption story of India, and you've done a fair bit. In the past, you've struggled with one of the exits. Now, you'll be happy that, the equity market gives that kind of depth for a large exit. We saw that in the Coforge transaction. Now, what do you think about the consumption story? And it's a very large basket. Which areas are you more focused on in consumption? And do you think that demand is taking a back seat? What is your view on the demand aspect?
Demand is slow. If you ask me, that is the one sector where we have, I would say we've been a bit disappointed, right? The underlying consumption growth in the country, pick the top 10 FMCG companies in the country, right? And look at the volume growth over the last 5 years. It's very telling. It would be in the low single digits at best. For most part, I would say, the largest FMCG companies in the country. So, I think that has been disappointing, but the reality is, just given the underlying demographic profile, GDP growth of the country, at some point in time that has to turn. Has it turned yet? I think the answer is no. Are we seeing some early green shoots? I would say yes. So I would say we are, again, I won't hang my hat and invest behind a consumption business assuming that I will see 15% market growth, right?
Right.
But we still continue to like the underlying fundamentals of investing behind consumer businesses. So we try to find our spots again, like Eureka Forbes that we did, right? I mean, again, great underlying brand in AquaGuard, very strong market share. We felt there's a lot we can do with the business because, notwithstanding market growth, there's a huge market penetration story there, right?
Yes.
And you can play that penetration story in a water purifier is a need for the entire country, right?
Yes.
And the penetration is very, very low. So there is, we try to find those spots. So I can't say, I can't say 5 years back if you had asked me, was water purifier business I will invest in, right? So it's very hard to say these are the 5 subsectors. Consumption is so broad, right?
Yes.
That we are looking at. But we continue to like the underlying consumption theme. We want to find the right assets, and that's a very bottom-up approach as we continue to look and find assets in India to invest in.
All right. So 2 important takeaways: demand showing some green shoots, but has been disappointing in the near term. All right. So apart from the 2 themes that we spoke about, what are the other themes which look interesting for this year? A lot of private equity players are now coming up with new themes like agri-tech, space tech. Renewable and future is already done, but other aspects like even sewage tech and taking care of cleanliness. So a lot of people are coming up with brand new ideas, I would say, in terms of investments. Anything that catches your attention apart from the consumption and healthcare, where you have already invested and have been, doing so much work?
My overarching theme would be we like boring. We like boring businesses. We don't need to, find that next big trend, and try to invest behind it, because that's not our investing style. We're not, fundamentally early stage investors.
Tried and tested,
right?
well proven.
Well proven
Yes.
sort of business models, companies.
Right.
Having said that, other than, healthcare and consumption that you spoke about, the 2 or 3 other sectors that we like, continue to be financial services, where we think there's a great opportunity. As you know, we've done a few deals there. The other one is IT, in that, we will pick our spots as to where we want to play in the services industry, because it's, gone through a bit of a choppy last 12, 18 months. But, we have some interesting assets on the analytics side there, a data analytics side there. And we have one on the digital product engineering services there. So finding the good niches within the IT industry. And the last one I would say, which we haven't done as an industry enough of, is a broader industrials and manufacturing space.
Yes.
I think it's been unloved.
By private equity industry, yes, and that needs maximum growth capital. Yes.
So we've been, the private capex cycle, as we know, has been effectively in a downtrend for a very long period of time, right? So that's a sector that we've picked, and we are kind of, dipping our feet and seeing whether we can find interesting spots within the overall manufacturing space where we can invest.
Okay, that's a very good and great idea that you have given us in terms of private equity looking at manufacturing. But Shweta, your investments in financial services, a big check went to Yes Bank. Are you happy with the way this particular investment is turning out for you?
Oh, absolutely. As you can see, at least in the recent past, the stock performance has been really good. But that notwithstanding, you see stocks go up and go down. That's sort of short term, right? But underlying fundamental of investing in Yes Bank, we continue to be very excited about. Investing in a bank in India, the valuation at which we entered at the highest level is a very good macro theme.
Yes.
Yes Bank is a very strong franchise. I think we, on the SME side, on the emerging, corporate side, and on the retail side, right? All 3 are very strong business legs for Yes Bank. And as the entire past cleanup has happened, if you look at the growth trajectory on these 3 vectors, it's been, I would say, very solid for Yes Bank. That combined with, I would say, now a very strong liability franchise. So if you look at the liability growth, the CASA growth for Yes Bank, I think it has really been, I would say, better than our expectations over the last 12 months. It will take, Rome wasn't built in a day, so obviously for the entire ROE trajectory to change and get to the double-digit levels, will take time. But I think all the value creation levers we identified for investing in Yes Bank, I would say each and every one of them is proving out to be right. So very excited about that investment opportunity.
That was a bold investment by both you and Carlyle, and I'm glad that you're happy with that investment. But in financial services, do you have more headroom for investments? And financial services is also a very big basket. Which areas interest you there now?
So we continue to like broader lending as a platform, and again within that we want to find the right niches. So we are spending time on certain niches within the lending side in financial services. Not, I would say, the broader generic, NBFC universe is not what we want to focus on, but find interesting plays within lending, and that's something that we're spending time on. So
focused lending like a housing finance, education finance,
microfinance, yeah, could be any of those subsectors where we are spending a lot more time. Yeah.
All right. And for this year, I remember that you have mentioned that India is the most important market for Advent International.
One of the most.
Okay, one of the most. And you're at the helm of this one of the most important markets. So Shweta, how much are you looking to deploy in this year in India?
We never set a target, actually. At Advent globally, we don't have a target for even US or Europe. We believe we will invest where there's the best opportunity. I think we have 25...
Is the rate, the percentage investment, is it increasing, and is there a conscious decision, and by how much? If you can give some little sense on that.
It's really hard to say, Nisha, because that's just underlying philosophy for us at Advent is we operate in 12 countries.
Yes.
We will, everybody, we have a $25 billion fund, 25 billion of the primary fund, 4 billion of the tech fund, so $29 odd billion to invest. So a lot of dry powder of this relatively, I would say, new fund where a third or so has got invested. So we have a lot of ability to invest. If you find the right opportunities, I can tell you capital won't be a constraint.
All right, lots of takeaways from there about Advent International strategy on India investments for 2024. With that, we'll slip into a short breather on Big Deal. On the other side, we put the spotlight on the new norms proposed recently by SEBI for market rumor verification. What could it do once it comes into effect, if it does? Stay tuned to understand. Welcome back. Let's put the spotlight on the recent consultation paper that has been floated by the market regulator SEBI on the new norms which could be proposed by the market regulator on the disclosure norms by the listed companies relating to the clarifications and verifications of the market rumors. This could have an impact on the M&A deals, insider trading, as well as price discovery for capital market transactions. Let's take it straight across to the expert joining in to give us more understanding on what impact it could have and what are the technical details. Gupta joins us now to give us his view. Mr. Gupta, so good to have you on CNBC-TV18. Now, my first question to you, if this particular consultation paper in its present form really comes into force, what is the impact in your view?
Thank you, Nishan. See, I say that let us understand what is the objective for this paper, why all this is happening. It is very basically related to the integrity of the market. Now, what happens, integrity of the market, we mean that the price discovery process should be good and there should be no asymmetry of information. Now, as you have seen in the past, what has been happening, there would be something cooking in a company and few people will be getting wind of it. And then one day it will appear in the newspaper or a media or a YouTube channel or anywhere else. And those who have watched that YouTube channel will be able to trade or take a decision on that basis. So the idea is to have a systemic analysis and ensure that asymmetry of information is as far as possible avoided. Now, you have seen right from last so many years that there something appears in the newspaper or something comes in the TV channel and the stock exchanges write to the company, although the company would be working on that, but they will say as on date, there is nothing like this, some of this thing. Now, the problem is that how to get out of it. And this is a very, very challenging issue Regulator understands it, industry understands it, media understands it. But those media people who are not regulated, who are not in the limelight, like millions of YouTube channels or millions of social media platforms, we do not know. So the idea is to consult the public at large or to consult the stakeholders and see what is to be done. Now, this consultation paper is output of the industry standard forum, which has suggested all the changes. Although, if you recall, earlier there was a policy where the SEBI had said that all the market rumors have to be verified, blah, blah, but then was put on hold. This matter went to the industry standard forum. They have given this paper. So objective is to make it in a manner where it doesn't hurt the company, but it doesn't hurt the investors as well.
All right, in its present form, Mr. Gupta, help us understand that if it is implemented, this particular, proposal, what will be the changes and the impact on M&A and insider trading norms? And also to focus on one important aspect that, the cornerstone of any merger and acquisition or any deal is also in the classified information and the secrecy of the strategy. How can that be preserved if you have to verify and come out clean on every aspect of query that comes to the market?
I think, Nisha, all these questions can be answered by just one big deal that happened in India. And that was merger of HDFC Bank and HDFC. And all of us and all the media, they not even had a wind of it till it was announced. So issue is that there is something wrong somewhere where the secret deals are also out in the open before they are done. In case of HDFC, there was nothing, neither print media had any issue, nor digital media.
But Mr. Gupta, I understand about the secrecy. There was no buzz in the market. Nobody reported it. But that was something that was expected for a very long time. It's only the timing that could not be captured by media, to your point. But on the price discovery mechanism, how could this be an impact? And I want to also understand what changes will be required if this has to be implemented to the norms.
So I said, when it is implemented, if you have seen that they have said very clearly that what happens when a news comes into the market or rumor is verified, the price always there is an impact on the price. Now, what they have said that they have instituted a mechanism where it will be the undisturbed price prior to the rumor verification. Now, the question there is it is in theory very good, but the price of any scrip or any share can move because of multiple factors. Now, when on the side by side there is a rumor or there is a news which has impacted the price, but there are other economic factors individual to the company or market-wise or the economy-wise or the country or maybe globally.
Right.
Now, how do we differentiate between the two would be a big challenge.
Yes.
As far as insider trading norms are concerned, there is not going to be any change. Only one change that consultation paper has said that in that case, the insiders will not be able to take a position that this was already in the public domain.
Yes.
That if they have not confirmed it, they will not be able to take a position on that.
All right, Mr. Gupta. Thanks so much for putting some understanding into a debate, which is a burning debate, especially for deal makers. So we'll keep at it and understand more of it. Thank you so much for joining us. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.